Don't assume that danger is not ahead. Assume it is. Plan for the worst, hope for the best. We all know that principle, right? Plan for the worst, hope for the best. Hey folks, this is Colin Richards, president and founder of Lord & Richards. And on behalf of my team, I am excited to be visiting with you once again on the subject of financial independence. That's the key in all of our programs, is we want you to be financially independent. And in this particular series of episodes, we've been talking about what I wish I knew when I was 30. And we're applying it right now in a mini-series to business owners, particularly young business owners. Businesses have been started at an enormous rate, especially since COVID. And so we've seen tons of small businesses get started, but the problem is so many of them unfortunately fail. And what I want to do is help young business owners to establish a strong business for God's glory that will be financially sound and that will take care of you as a family. In other episodes, I've reminded you, make sure you take Profit First, using Michael Michalowicz's book, Profit First, the same name. Make sure you're set aside money each month out of your operating account for your own profit in a separate account that you don't even see. Other money needs to be set aside for taxes and so forth. So those are key principles, and I would highly recommend that book. Well, in this particular episode, I'm going to dial in on some Lord & Richards principles of financial independence that apply to you as a business owner. And we're talking particularly about risk, foreseeing danger and avoiding it. Number one risk I think that we're going to want you to avoid is bankruptcy, right? In subsequent episodes, we're going to be talking a lot more about your financials. But the thing we want to make sure you do is understand the language of business. The language of business are your financials. It's accounting. That's the language of business. And you need to be recording your financial transactions in a good software such as QuickBooks or something similar. And then you need to be recording and reporting. And if you're super busy in your business, fantastic. That means you can take the step towards employing somebody, an accountant or a bookkeeper. I happen to outsource my accounting. I don't have it inside the firm. A lot of places have it inside the firm. I use a group of accountants outside of my firm, but they have access to all my accounts and they provide monthly reports. And let me just explain to you that if avoiding bankruptcy is the danger that you're hiding yourself from and warning yourself about, cash is the thing to watch. Reporting can take a lot of different forms, especially if you're getting into other types of accounting beyond cash accounting, such as accrual, which may be necessary in your kinds of business. Not all businesses need to be operating on accrual if there's not significant lag between when you perhaps make a sale and get the funds, or if you're not involved in inventory, those kinds of things. Service businesses may do fine on cash, but those reports have specific bits of information they're going to give you. And you need to, take some time and get some information on how to read the language of accounting if that's not already something you do. But here's something you can do as a shortcut. Watch your cash flow, right? Watch your cash flow. Don't let your financials divert you from the fact that you might be losing cash, that you're seeing that balance go down every single month. When the cash runs out, the game is over, right? When the cash runs out, the game is over and bankruptcy is ahead. Another strong piece of advice I'm going to give you is to insure yourself against certain types of losses. There are losses where you could have transferred the risk to somebody else. That's called insuring, right? For example, what if you were disabled and your business no longer had you at the helm? Would your family be able to continue to survive? So disability insurance is not that expensive and could provide an income if you are permanently disabled, whether related to the business or not. Disability insurance could cover if you had some type of severe health crisis come upon you, even if that didn't occur at work. So in insuring against the risk that you'll no longer be able to generate income, this is an important one. We make sure all of our employees at Lord & Richards have disability insurance. And if you make a pretty good income and want to go past potentially the roughly $6,000 a month that full disability will give you, then you want to look at maybe an individual disability insurance policy that will add additional dollars if you make more money and want to be able to insure even more income. So don't assume that danger is not ahead. Assume it is. Plan for the worst, hope for the best. We all know that principle, right? Plan for the worst, hope for the best. Get an inexpensive disability policy if you've got people relying on you especially. And that brings up health crises, right? I can't tell you how often I meet with business owners who, in order to save money, and it's a big ticket item, don't have basic health care. They don't have basic health care. And they are gambling because there are so many things we don't understand about our own bodies and that we may not feel. And rolling the dice, going without health care. Maybe you're very young and you've got a spouse, you have the risk of maternity, right? That can be very expensive. And so whatever the problem is, you don't want to be left holding the bag where you can't afford the treatment needed to take proper care of yourself, either an emergency or a healthcare crisis. Absolutely. Even if it's just the lowest cost, cataclysmic type of insurance, major medical, that kind of thing, you need to be covered. Just put it in the budget along with food and clothes and housing. You need to be covered. And then, of course, early death. We hope this never happens, but of course it does. And we hope it's not you, but it could be. And what would happen if you were gone to your family? Do you have basic life insurance? Now, here I'm talking about the simplest form called term. I'm not saying that other forms of insurance are not valid. Permanent insurance can be a valuable and useful tool, and those who bash it, frankly, come from a position of ignorance and just not working with a large enough clientele to understand where that is needed. And I'll talk about that in other episodes. But for this particular need, term insurance is appropriate to cover during your working years the possibility that income could be taken away from your family if you passed away early. And of course, we don't want to gamble with this. Term insurance is so inexpensive, so easy. You say, well, how much do I get? Well, a couple $100,000 do it. Here's what you need to do. You need to assume that your wife and your children are going to need to live on this for the rest of their life, right? If you have children and your wife needs to care, look at their age, right? If they're young, you need more. If they're older, you need to just focus on your wife, okay? But term insurance is designed to meet the needs of your family when you're gone. And so whether it's a 20-year or a 30-year policy, you need to take your income, you need to take your expenses and multiply that times roughly 20. That's a little bit more than you'll hear elsewhere. But the reason I talk about that is because you need leave taxes out of it because your life insurance isn't taxable. The benefit isn't taxable. But take your expenses, not your income. Take your expenses and multiply them times 20. That will cover today. Now, bear in mind, your expenses, your family's expenses will go up. So some people even ladder in additional policies to slowly raise that standard of living during the working years for your spouse. And of course, this should cover until other things settle in, such as savings and Social Security. And then another major risk that a lot of business owners don't contend with is, where does the business go when I die? Where does it go? Do you have a plan for that business to be sold? Do you have a person who's going to step up and take over and buy the business? This needs to be worked out in advance, and we'll be sure to take time on a subsequent episode of the Lord & Richards Show to talk about that one major subject of succession planning in your business. In the meantime, I know these are big topics, and I work with business owners of all ages all the time. And from the experience that I've had myself, as well as what I've observed from my clients, I would be delighted to help you. My multi-generational advisory team would be delighted to help. It just starts with a simple phone call.